Hello, everyone. Thank you for joining us today, and welcome to this educational presentation where I'm happy to introduce a brand new feature we have here today. And this is going to be the first time we're going to be talking about it live. And this is the brand new Primo Oscillator. I'm happy to say that it's taken a little while to put this together, and I thank you for your patience. But this is a great tool, and we strongly feel it will elevate your trading. In fact, take it to new heights, because its main specific purpose is really to help you make your own trading decisions. Okay, we've always said that that's the main philosophy behind everything we teach at Specialist Trading and Pro Trader Strategies, and that our goal is to teach you so that you can ultimately make your trading decisions. And this is one more piece of the puzzle to help you do that. And a lot of people have asked before, why have you not focused on oscillators, or why have you not gone down this road before? And it's because we've always felt that there's been a problem with oscillators, and mainly they're not that consistent. So let me explain to you in detail what we feel the problem with most oscillators is. Let's look at this older chart here. This is in the spiders. Okay, as you can see in the beginning of the chart, it went straight up, and then when it reached its top, it went straight down. Now we have a standard stochastic oscillator plotted at the bottom of this. Okay, the way it's most commonly used. The oscillator, which measures price movement, basically, is colored here in blue. As you can see it moving up and down, up and down. And then we have upper and lower thresholds. So the standard way to use oscillators is as overbought, oversold tools, telling you when something has gone up too much or something has gone down too far. So once the oscillator in its standard use goes above the upper threshold here, well, most likely that's assumed to be overbought. So when something is overbought, it's overextended to the upside. And if you're long a position, let's say you were long the spiders or long the market, because the spiders just represents the S&P 500, this is where you want to sell, right? And if you're a more aggressive trader, this is where you want to be going short. Well, looking at this entire period where we were overbought, how well would that have helped you selling all the way up, right? Let's say you were long a position, maybe long the options, maybe you were long maybe some stock, and you decided to sell because you figure it's gone up too high, and you would have been very upset seeing that you left a lot on the table. And what happens if you went short? And what happens if you bought some puts or you went short the stock? You would be very unhappy. In fact, you most likely would have lost a lot of money. Now, on top of that, when the oscillator ultimately left the overbought zone, what happened? It went into the neutral area and then went below the lower threshold. So what this is called is the oversold area. This means that it's a little bit too extended to the downside. This means you should start to look to buy, okay? So if we had any money left from our first trade here, and we decided to go long the spiders or a stock within the S&P 500, or maybe buy some options, how well would that have worked had you simply bought something when it was in the oversold area, okay? This is what we feel is the problem is with most overbought, oversold oscillators. Sure, they can work fine and work really great every once in a while, but over time you'll see these extremely long overbought and oversold areas that really will make you give back just about everything you've made on those other trades. So let's clear all of this noise and let's show you what we could have done. We'll go into detail later on in today's presentation with the Primo Oscillator, because the new tool actually would have generated a turning point setup right here. So from this point on, you could have decided, once again, make your own decisions whether to buy or, but at least not to go short, and telling you that most likely a very strong turning point was about to take place. You could have taken advantage potentially of 45 points to the upside. Now, using the Primo Oscillator, not the stochastics, another turning point setup was generated right here. Even though it didn't pick the top, and this tool is not designed to pick bottoms or tops because it's not a overbought, oversold reversal type of oscillator. It's just determining short-term turning points. It would have determined that one was right here 2 days before the top. And if you didn't want to take advantage of that or missed it, you could have taken advantage of another one and potentially captured upwards of 40 points. So this is what we're going to be talking about today, and which we're really happy to introduce. This is the Primo Oscillator, a brand new feature we have at Specialist Trading. The first time we've delved into this type of an indicator, and we really feel it's going to help improve your trading. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. As I've often said, if you're not familiar with what a specialist is, it doesn't mean that they're any more special than any other traders on the floor. It simply means that if you wanted to buy or sell a stock, the floor broker took your order and then walked up in front of the booth of the trader who specialized in making a market. So he had to either buy or sell in order to create a fair and orderly market of whatever order you had. I was a specialist in stocks like US Air, Waste Management, even IBM, and I made markets roughly in about 60 stocks. I traded through the crash of 1987 and the bull market that followed. I've traded straight up markets. I've traded straight down markets. I've traded sideways markets. And any system or trading methodology you can think of, most likely it's been around before, just been renamed or rebranded. So I've traded it before. So in my 45 years experience of trading, I really know what works in terms of consistency. And I know what doesn't work, because nothing works 100% of the time, all the time. Everything will go into some type of drawdown phase. But what we're looking for is something that's consistent. So that's why I teamed up with Pro Trader Strategies roughly about 13 years ago, and we formulated Specialist Trading with one goal in mind, and that was simply to teach traders how to trade in order to make your own trading decisions. Happy to say we have students now in over 115 countries and in every state in the United States. So hopefully we're doing something right and making these students more consistent traders in their lives. Now, you'll see that in today's educational presentation about our new feature, the Primo Oscillator. But once again, we are first required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this new tool, but please remember that we can in no way guarantee that any of the results you're about to see will be repeated in the future. Since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, please, if you haven't done so already, you may want to copy down our handle right here. Please feel free to follow us on Twitter. I post different information on a daily basis, lots of great ways to learn about what our philosophy is about trading, about our different ideas about buying and selling in different markets and in different time frames. Also, I give you little bits of financial wisdom to help educate you. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. So remember, we are first and foremost an educational company. This means this webinar is different from most other webinars you may have attended. I know a lot of you come to webinars thinking that the person giving the presentation is going to tell you what they think the market's going to do. Have we bottomed out, or have we topped out, or what's the best stock to buy, or what's the best market to short? Or the one I get the most often is, what's the best time frame? These are all things ultimately that you have to determine. Remember, it's all about you making your own decision. The reason why we focus so much on this is because of my 45 years of trading. I started out with roughly about 200 or 300 traders on the trading floor. And we used to trade all the time, in and out of stocks and markets all the time. Since that time, I would venture to say there's less than 5 of those people that are still trading. The reason is because most of them have not taken their signals, have not taken their, not just signals, but actually their methods for trading from their own trading decisions. They rely on someone or something else to tell them what to do. I mean, think of it. How many times do you read a blog telling you what someone thinks about the markets, or maybe you go to a chat room or to a trading room, or listen to the guys on TV? They're supposed to know everything about the market, right? Every time you do that, what you're really doing is telling the markets, I don't know what to do. I don't have enough experience. I don't have enough knowledge. I don't have enough money. So I'll let these guys decide for me what I should buy or sell. And think of any other occupation, any other endeavor. Think of an athlete on the floor of a basketball court. Say, how do you think I should shoot this basket before I shoot it? What do you think I should do? Or think of a brain surgeon in the middle of an operation asking the nurse, how do you think I should operate? Or think of an airline pilot asking an assistant, how do you think I should fly this plane today? All right. You think it's ridiculous, right? Traders do this on a daily basis. Every time you go to a chat room and find out what someone else likes, every time you listen on TV to what they think the markets are doing, every time you go to a webinar where the guy tells you what to buy or sell, you're basically saying, I don't know what to do. Why don't you tell me what to do? And that's no way to use your hard-earned money in any endeavor. So that's why Pro Trader Strategies and I teamed up with one goal in mind, and that was simply to teach you how to trade with the specialist edge. This is the same edge I was taught some 45 years ago, and what really saved my trading. And hopefully we can save your trading by putting the power back in your hands, by giving you enough information and things that have high levels of consistency. Don't work 100% of the time, because nothing works 100% of the time, but have high levels of consistency so that ultimately you can make your own trading decisions. In my 45 years of trading, the only traders who are still around are the ones that make their own trading decisions. They don't watch the news on TV. In fact, they don't look at news at all. I stopped looking at news 4 decades ago. They don't wait with bated breath for the economic indicators to come out. They don't go to chat rooms or trading rooms. They don't watch guys on TV. They simply have a plan in place, and then they follow it, okay? That's what we're trying to instill in you, and we're trying to give you the tools and information so that you can develop your own plan. Okay, now we have a great presentation today. As I said, we're going to introduce a new tool we have, the Primo Oscillator. But before we begin, remember, this is a Zoom presentation, but it's a static PowerPoint presentation. So please disable all cameras and microphones. Okay, we're not going to be sharing our questions over the speakers or showing our pictures. This is just something we're going to be looking at, and then at the end of the presentation, I will take your questions. So if you have any questions, then you can go to the chat box or the question and answer box and type them in, okay? Now, this is being recorded, so if you have to leave early or for some reason you're having technical issues, you can't see or hear me clearly, don't worry. Each and every one of you will get a link to this recording, okay? So please, if you have questions, let's wait till the very end. And with that stated, let's start and begin today's educational presentation. Now, we're going to be talking about a brand new tool, but for those of you who haven't seen the tweets or haven't seen anything from Pro Trader Strategies, and you're wondering what exactly is the new Primo Oscillator based on, okay? Well, let's tell you what it's based on. And in order to do that, let's go back to the standard definition of most oscillators, okay? Here's the standard definition. Most standard oscillators measure the amount that a security's price has changed over a given period of time. All right. So we're measuring the price, how much it's changed over a given period of time. So how does that differentiate from what we have and what we formulated with the Primo Oscillator? Well, the Primo Oscillator measures the amount that a security's price pattern has changed over a given period of time. This is entirely different from most oscillators. Remember, most oscillators look at the price, the closing price, or where it is at that moment. What the Primo Oscillator does is identify and measure the amount of a security's price pattern. And this is a proprietary pattern that we have identified that happens in the entire universe of stocks. And so what we're doing is identifying that and then measuring it to generate the oscillator plot. So let me share with you exactly what we're talking about. Now, some of the advantages to using the Primo Oscillator are this. It shines a light or identifies these high probability short-term price turning points. Now, we don't mean top formations or bottom formations. We're not looking for reversals, although that may happen. That's not the goal. We're looking for short-term price turning points as determined by this pattern that repeats itself, okay? Now, the oscillator provides you with numerous trading techniques that are based on the oscillator's fluctuation. So a lot of you may say, well, Steve, I don't have a strategy. I don't know exactly how to get in and out using your oscillator. Well, not to worry, because the oscillator itself will provide you with these different trading techniques to tell you whether to go long or to go short. But lastly, the advantage of the oscillator, and most importantly, is this. It's just one more piece of the puzzle that enables you to make your own trading decisions. Okay, let's say you have a strategy you feel comfortable with. You can use this on top of the strategy to help fine-tune your entry, because the oscillator will confirm it for you, or to tell you whether you should be in this at all, or maybe you should not take the signal and wait for the oscillator to confirm it. This is a great, great tool, once again, to help you make your own trading decision. This is what it's really all about. All right, so now let me start with asking you a question. Which oscillator would you rather apply to your own personal trading? Let's look at our example again, once again in the spiders, okay? This is a standard stochastic oscillator. Remember, we explained to you the oscillator is in blue here. Anytime it's above the upper threshold, it's supposedly overbought. Anytime it's below, it's oversold. And we had all this noise here, and we saw how you would have lost a lot of money doing everything it had taught you in this past 3-month period. How could the Primo oscillator have helped you looking at the exact same chart, the exact same time frame? Well, let's now compare this to the Primo oscillator. Here we have the same chart, but now with the Primo oscillator applied. Here's the oscillator in blue. And we also have thresholds. Here's the upper threshold, and here's the lower threshold, okay? Now, in this particular scenario, this is just one type of setup. We're going to teach you upwards of 4, possibly 5 different setups in the course, but this is just one of them, okay? Now, when price goes above the upper threshold, obviously it's telling you that price change is most likely going to happen, and the price change may be to the downside. But as you see here in the beginning, when it went below the lower threshold, what's that telling us? Well, here's where the lower threshold was violated, right here, okay? And if we look at the corresponding area on the chart, it was right here, telling us that most likely there's going to be a strategic change in price direction. We're not saying that this was the bottom, because many times it will show you that just after one bar in a sustained trend. But in this case, it appears as if it's close to the bottom. And so you could have taken advantage of this nice big move all the way up until this point right here. So what happened? Well, the oscillator went above the upper threshold. So now the oscillator is calling for, in its fluctuation, a strategic change in price direction, most likely to the downside. So we look at the corresponding bar up here, and that's right here. So at this bar. Now, as you can see, we didn't call the top. I know a lot of you think, well, so this is going to tell us the exact top and the exact bottom. No, many times you'll see within a trend a signal or a setup being generated. In fact, you'll see one in just a few seconds here. But this was telling you that to get prepared, because most likely this is where there's going to be a trend change. And as you can see, look what happened. Now, once again, just about a week or two later, look what happened. Within the downtrend, there was another setup calling for a turning point. But since price of the oscillator was above the upper threshold, this is most likely saying that, according to the corresponding bar, that even though we were up, the turning point is going to be the opposite direction, and you could have taken advantage of that once again to the downside. So whereas using your standard stochastic oscillator would have generated nothing but losses, you had 3 possible winners here, or at least in sync with the direction of the spiders, by using this one technique. And remember, once again, this is just one of the techniques we will be teaching you in the course. So using this same technique, let's look at some more Primo oscillator examples, okay? And remember, once again, if you do have any questions, please wait till the very end of the class. I promise I'll get to each and every one of them. You can just write them in your chat box or in your question and answer box, and we'll get to them at the end. Okay, let's look at another example here in CrowdStrike. This is CRWD, and we have a standard stochastic plotted. Once again, here's the stochastic right here. Now, as we can see, it was headed lower right from the beginning, and it's hard to detect here, but it went just below that lower threshold. So what this is telling us is that at this point right here, we are oversold, and you should be buying right here, okay? So if you look at the corresponding bar, well, guess what? It went up for 2 bars and worked kind of nicely until this happened, okay? So you would have had to been very quick, because the price changed on you altogether. And there was no detection that we were going to change, because the oscillator was in the neutral zone, nothing really much to give us any advance notice that things were going to change. Now, to make matters worse, if you were still holding on to that position, look what happened right here. Now it's telling you it's oversold and time to buy some more, okay? So you would have bought some more, and it continued to go lower. So this would not have helped you at all. How could the Primo oscillator have helped looking at the exact same chart? All right, so we apply the Primo oscillator now, and we're using that same technique, which we're going to be calling type A setup. And looking at the oscillator, we see here that there was no buy setup, but there was a sell change in price direction here, right when we closed above the upper threshold. And that happened right here. And you could have taken advantage of the change in price direction from that point on. See how that would have been an entirely different scenario from using your standard stochastic oscillator. Let's look at another example here in KLAC. Let's look at an example using the MACD, a very popular oscillator as well. Okay, now in this case, this uses a MACD, which is the red line, That's the oscillator, and a signal line, which is the blue line. All right. So what you look for is when the MACD goes above the blue line, that's calling for a buy setup. Okay. All right. So let's see where the corresponding bar was on that buy setup right here at the very top. How well do you think you would have done buying right there when the MACD crossed above? Okay. And these are just the standard generic settings on these oscillators. Not very well, right? Most likely we'd have lost. Now, look what happened about a week or so later. The MACD ultimately crossed back below the signal line. So it would have told you to sell and to go short right here. So you would have sold with a loss, and now you're short. And this is working out well for about a week or so. But if you didn't get out, look what happened. The MACD went right back above right here on the 24th, I believe. And so if you were still in the trade, you would have had to cover for a loss because you would have shorted right here or sold and then got back in right here. Okay. So not that good of a trade. But at this point, let's say you had any money left, you would have gone long, and at least you would have made some money here because that was a nice upper move in the stock. And at least you could have made back some of your losses and taken advantage of that nice up move. But you had to go through 2 losses in order to get there. How could the Primo oscillator have helped you in the exact same chart scenario? Well, we apply it, and here we have it once again. The oscillator, here's our lower threshold. As we can see right here, there was a strategic change in price direction setup, telling you that most likely since you've been going lower, you're going to change and go to the upside. The corresponding bar was right here on the 14th. And remember, the MACD told you to get long somewhere up here. So a full week or so in advance, the Primo oscillator told you that there was most likely a oscillator fluctuation and you should be looking for long setups, and you could have taken advantage of all that. Another example here in the QQQs, that's the ETF that represents the NASDAQ, okay? Let's use the MACD once again. Okay, the MACD, here's the MACD right here. It crosses above the signal line, so that generates a buy signal. And how well would that have worked if you had bought right there close to the highs? Look what happened following that, the week following. Okay, let's say you bought a stock in the NASDAQ 100 and you use this to help you feel confident that it was time to go long. That wouldn't have worked out very well, right? You would have had a loss on your hands. Once again, the MACD ultimately went back below that signal line, telling you to get out of your trade. You would have had a loss. And if you were more aggressive, you would have gone short. And once again, that would have worked out for 2 or 3 days until you had a big bounce. And then the MACD went right back above. So now you're getting whipsawed. You would have bought here. Whoops, went back a little bit too much. You would have bought here, gotten out here, sold here, then gone long, and maybe made a little money to make back to the upside. But did you see how you're whipsawing going back and forth? Let's apply the Primo oscillator now, okay? Here's the lower threshold. There you have a strategic turning point setup. Most likely it's going to be to the upside because it's going below the lower threshold, and you had a nice move up there. Roughly, I would say anywhere about 15 to 20 points in the QQQs, okay? And then weeks later, another buy setup right here. And another 20 points or so in the QQQs. So you see how this could have helped you so much more than using a standard MACD. Now we can go out for a longer term, all right? We've all seen Netflix lately. We saw how Netflix fell out of bed last year and how so many people lost so much money. One of the reasons why is because they're using inconsistent tools like standard oscillators. Once again, let's apply to this weekly chart of Netflix a standard stochastic oscillator. We have the upper threshold and the lower threshold. Right here in December of 2021, on a weekly time frame, the stochastics went below the lower threshold, deeming that we were now in oversold area. You should be looking at this to buy, okay, from here to here. Well, if we look at the corresponding bar in the Netflix weekly chart, how well would that have helped you to buy? Not very well, right? Now the oscillator left for a month or so and then went right back into the oversold area. So let's say you went right back in and bought more and doubled up. How well would you have done? In the beginning, it was trading at 640, 650, and now it's down to roughly 200, okay? Now, to make matters worse, about a month later, this oscillator went back now into the overbought area. So now it's time to sell, right? Roughly around here. So how would that have worked? you see how there's no consistency in using these worn out tools? They don't have a lot. Every once in a while, they will generate some really nice setups, but they really don't work very well. This is why this was the impetus behind us working on the Primo oscillator. So let's look at the exact same weekly chart of Netflix, but this time we're going to add the Primo oscillator. Now, we totally sidestep this downward move using this technique, but right here in June of this past year, what do we have? The oscillator went below the lower threshold. So the fluctuation is telling us that most likely there's going to be a price direction change. Most likely it'll be to the upside because we went below the lower threshold, and we had another one right here just a few months ago. Since then, the stock has gone up roughly 125 points. Let's look at another weekly chart, this time in the Boston Beer Company, SAM, S-A-M, okay? Now, using a standard stochastic, once again, the stochastic went above the upper threshold right here, telling us that we were overbought and that we should look to sell this, okay? And so that was right here, roughly, and look, you would have had to gone through 3 or 4 months to the upside. If you had gone right off the very first time it went into the overbought area, most likely you would have probably given up. You would have lost a lot of money and said, I can't take this loss anymore. And then to make matters worse, the oscillator stochastic goes below the lower threshold right here in May of 2021. And how would that have helped you to buy all the way down? Okay, not very well. But this entire time, the oscillator is telling you we are overbought. If we were overbought here, well, we're really overbought here. And if we're overbought here, I'm sorry, we're oversold. And if we're really oversold here, we're tremendously oversold here, and so on. You see, there's no such thing as overbought or oversold. That's the great myth about trading. Stocks, futures, currency pairs can go up as high as they want, and they can go down as low as they want. We've all seen equities go down to zero. Let's look at the same chart in the Boston Beer Company. This time we're going to apply the Primo oscillator. All right, we have the upper threshold, I should say, and the lower threshold. So what do we have here? This was in March, once again, of 2021. This is telling us that most likely there's a strategic price direction change right here, and it'll be to the downside. So if we look at the corresponding bar, it was right here, pretty much the same as the stochastic had identified as well. So most likely this would have been a loss if you're an aggressive trader and use this right off the bat. Here's the good news. In the course, I will teach you a conservative way to enter that would have you avoiding all this, and you would have entered right here on this bar. And therefore, you would have waited because you were more conservative and could have taken advantage of this 785 points to the downside, okay? Now, the previous examples I just revealed are just one of the multiple ways in which to apply the Primo oscillator to your trading. Remember, I'm going to show you upwards of 4, possibly 5 different ways to apply it. What I showed you right now is just one. There are numerous other ways to apply it for different styles, for different techniques, and also for different motivation for what you want. Would you want to stay in longer? Would you want to get out quicker? Also, everything you saw was on our platform, the BTS Primo charting platform, and we developed it so that you have many ways to display it. For example, what we've been showing you most recently in that type or that style of technique was using a line oscillator for the Primo oscillator. But you can also use it as a histogram. You have the capability to change whenever you like. You can also apply both of them together. A lot of traders like to use the line and the histogram in tandem. That's fine. You can do that as well. You can design it the way you want it to look. You also have the capability to plot lines or different benchmarks. All right, you can apply it here as we see with the Instagram. You can also apply it with the line oscillator, okay? Now you can apply an indicator such as a moving average to it as well. A lot of oscillators have a moving average attached to it. Here we have a moving average in pink you can apply, and I'll show you a technique that uses a moving average in the course to generate setups. Now you can increase the size of the oscillator if you want it to be dominating the majority of the chart, or if you want, a lot of the people when we were testing were just looking at the oscillator altogether, and they weren't even looking at the actual issue that it was attached to. They were just actually looking for signals off of the oscillator on a blank page as well. So there's many ways to apply it, many ways to use it, which once again, we'll go over everything in its entirety in the course. So let's review really quickly before I tell you about a great offer. What are the advantages of trading with the Primo Oscillator? It identifies these high probability short-term price turning points, okay, that can really help you. Now, let's say you are trading your own strategy. Let's say you're comfortable with it, but your entries or exits are not that good, or they just get you in a little bit too early or too late. Well, you can use this to help you fine tune those entries and or exits. You don't have to give up your current strategy. This is just an additional tool to help you make your own decision. Now, let's say you don't have a strategy, or let's say the one you have doesn't work at all. You wasted your money, $5,000 using that strategy that's supposed to generate a lot of winners. It doesn't work at all. Well, the Primo Oscillator provides multiple trade opportunities just based on the oscillator fluctuations themselves. Remember, 4 or 5 different trading techniques just using the oscillator alone. Now, the oscillator also will increase the consistency for both intermediate traders and investors. So if you're just a trader that looks at daily bars, you look at weekly bars, it will really help you no matter what type of trader you are. But here's the most important advantage. It enables you to make your own trading decisions. As we said earlier, it's just one more piece of the puzzle that will give you the confidence to pull the trigger, that will give you the confidence to say, hey, that's a type C type of setup. I think I'll sell my position or I'll go short. Or that's a type A type of setup. Looks like we're going to have a strategic price direction change. Maybe I'll go long and use my strategy to look for buy signals. Either way, you are in charge of your trading. Remember, my goal as a mentor is to put the power back in your hands, not to listen to anyone or anything else, but to make your own trading decisions. And the reason is because the only traders that are consistent, the only ones that can last more than a couple of months or a couple of years, but last maybe a couple of decades, 2 or 3 decades, are the ones that make their own trading decisions. And the Primo Oscillator is just one more tool to help you do that. Now, here's today's special offer. We're going to give you the opportunity to be one of the first to trade with the Primo Oscillator. I want to thank you so much for your patience. I know we had a lot of trouble putting this together, and it wasn't our fault. It was just with the programmers, because our programmers are overseas, and we had a really difficult time incommunicado with them. So we want to just say thank you for your patience. But now you can be one of the first to trade with the oscillator. Now, we're also, with this great offer we're going to be sharing with you in just a few moments, we're also going to throw in 3 extra bonuses, okay? Everything you saw today was displayed on the Primo charting platform. I developed this with Pro Trader Strategies. The PTS Primo charts really helps you learn how to trade, and it's the only place where you'll find the Primo Oscillator. So because of that, if you sign up with us very soon, we're going to throw in a full year free of the platform, okay? You're going to get the data, you're going to get everything, you're going to get the oscillator, and you're going to get all the different tools to help you trade that are included on the platform. So this is a great offer in and of itself. This is an extra savings of roughly over $1,500 to almost $1,800 by having a full year of the platform. But remember, there are a total of 3 bonuses. So what are the others? Well, bonuses number 2 and bonus number 3 are full-fledged courses. We're actually going to throw in courses that I've taught separately on. They're going to be included within the Primo Oscillator course, things to help you trade. For example, we're throwing in the Steps course. This is a course designed specifically to help you fine-tune your short-term entries. It's a abbreviation for short-term entry points. So if you get a setup, a change of direction, and you're not exactly sure where to enter, all you have to do is click on Steps on the platform, and it will automatically show you the arrows where to do that. Now, let's say you're in a position and you don't know how to protect yourself. You say, well, Steve, where do I get out if it goes against me? For that reason, we're applying bonus number 3, which is our dynamic stop placement course, another course which I taught separately from any other course. And this is a great tool that is based on market behavior that automatically generates high probability stop placement, either to keep you in a trade for as long as possible or to get you out as soon as the trend has changed. Now, let me share with you an example of how this works. We have the Primo Oscillator here. Once again, we're using the type A setup with the oscillator, and we're looking at an older chart here of Apple, okay? Now, as we notice right here, there was a type A setup to go long because we went below the lower threshold, okay? Now, that was right here with this bar. So if we had bought right there on the close of that bar, well, sure, we had a nice trade. But what if we didn't? What if we missed it? Or what if we wanted to wait for a little bit more confirmation that it was going to go in our direction? Well, we could have waited. And once we saw after a bar or two that it was going higher on our platform, click on steps. And you'll see signals automatically being generated. These are high probability setup signals to get in once the trend was in the underway. Now, once you're in the trade, okay, where do you place your stop? How do you protect yourself? What if the trend changes? Where do I get out? Well, once again, using bonus number 3 now, click on dynamic stop. And you'll see that these are auto-generated on our platform. They come exactly where they should be just by using the proprietary formula. And this would have kept you in the entire time. So these are included. These are fantastic bonuses. As I said, I taught separate courses for each of these bonuses, and these are included within the Primo Oscillator course. So not only will you be one of the first to trade with the Primo Oscillator, but you're also going to be invited to a limited amount of people to a live educational class. This is for a limited time only, and this is just for the first come, first choice people that have decided to become students of mine in the Primo Oscillator. So let's break it down. Now, the early pre-launch special price is usually $49.95, okay? Now, if we added the full year of the platform, and if we added the 2 extra bonuses and the 2 extra courses, we're talking over $15,000, okay? But what we're going to do is even slash this price. We're going to save you 10%. We're discounting this price by $500, going down to $44.95. So you're going to save $500. You're also going to get included with that price. You're going to get 12 months free of the platform with the steps course and the dynamic stop course. Now, you're also going to get, I didn't have enough room here on the screen, if you want to create a payment plan. So you don't have to come up with a full $44.95 if you can't at this moment. For a small deposit, you can still be up and running with a full year of the platform, with the steps course, with a dynamic stop course, along with the Primo Oscillator. Now, if you're still not convinced, let me show you how the Primo Oscillator could have helped your trading this past week. Because the Primo Oscillator, because of these 4 different techniques I'm going to be teaching you in the class, it's always generating something, all right? Let me just share with you how this could have helped with the market. We've all seen that the market went up really nicely last week, and now it's been going straight down. So let's apply this after what was announced last week. Yahoo Finance reported that the S&P 500 ends a 3-day losing streak on the 30th of November, which was just last Wednesday from today, a week ago today. Stocks saw broad gains Wednesday after the Fed Reserve Chair Jerome Powell confirmed that the central bank will slow the pace of its aggressive rate hiking campaign that has weighed on the market. So therefore, the Dow closed up over 700 points, 737 points, or 2.18%. And the S&P 500 added over 3%. So this was a good day, right? The S&P ended its 3-day losing streak. And this is the day right here, the 30th. This was just a week ago today. We had a big rally, all right? Now, there is another technique in the course I'll be teaching. This is type C technique, which actually generated a buy signal 2 days in advance based off of this oscillator fluctuation right here. So looking at the corresponding bar, here's where you could have bought 2 days in advance and taken advantage of that 700-point gain in the market. Now, let's say you have said to yourself, wow, this is great. It looks like the market's bottomed out. I'm going to hold on to this and make a lot of money. But look what happened here. Now we have the oscillator above its upper threshold. This is the type A setup, okay? So what's that telling us? Well, most likely, we're going to have a strategic price change, this time to the downside, because we went up to above the upper threshold. So you could have sold your position, and if you were more aggressive, you could have taken advantage of this large move that we've seen happen up until yesterday, okay? Now, this just happened a week ago. And these are things you could have taken advantage of just in the spiders. You can apply this to the broad stocks and universe of stocks and the S&P 500 to use the same thing. But I'm just showing you, because the market has been very strange lately, how this could have helped you. And I don't really think, in my opinion, the stochastics or the MACD could have helped you as well as the Primo Oscillator could this past week. Now, there's going to be a special Primo Oscillator trading class probably within the next 3 to 4 weeks. I will be teaching it to a limited number of students. You will be a part of that course class, if you sign up right away, but we're keeping it to a limited amount. We don't want it to be over a specific amount because then it gets too crazy. We have too many questions and too many people are involved. We want to keep, everyone will be able to sign up, but once we get to a certain point, we will stop the free live class, okay? So that class will be probably within 3 to 4 weeks. I will be teaching it live as we're seeing here over a Zoom class, and you will be able to ask me questions, and I'll show you a lot of updated live charts so we can really see how this is working in action, okay? That's also included if you sign up right away. So here's how to take advantage of this. Contact Pro Trader Strategies. They help develop the oscillator with me. You can reach them at trading@protraderstrategies.com. Once again, as I always say, I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now, more than happy to answer any question that you may have. That link you see at the very bottom is the link that will take you to the info page. You can actually sign up there if you like, but it's not a live link. We've just posted a live link on the chat box. So if you have a chat box open, you can see that a live link has been posted there, okay? Now, I promised you I would answer questions. So if you have any, please go to your chat box or to your question and answer box. And I see that we already have some already. A couple of customers are asking if the oscillator is going to have a scanner like the other strategies. Can you clarify why not? Yes, well, we won't have a scanner because it's a little bit difficult to go. I don't want to, it's hard to clarify, because if we clarify why we don't have it, I kind of am giving away a little bit of the inner workings of the strategy, and I don't want to go into that until I get into the class. But let's just say that the oscillator covers a wide, the oscillator itself will cover a wide range of a number of stocks, which takes away the scanning capability, why you really don't need it. And I will go into that more in detail within the class. So actually, it makes it a lot easier. What we've done with the actual Primo oscillator is that we've made it simpler so that you actually don't have to scan for that at all. And it makes it simpler with that. Now, we may have updates in the future, and that's one of the other things that's also included as well. You will not be having to pay for any updates. If you sign up now with one of the first to trade with the oscillator, you will not be having to pay extra for any updates we have on the oscillator, any improvements. Those will come included. But if we go past a certain point, which I believe Pro Trader Strategies has, I'm not sure what that point is, then those updates will cost you. So as we have further updates, say we do apply some type of scanning feature that's a little hybrid of what most scanning features are, then you know, most people who purchase the oscillator later will have to pay for those updates, whereas you, being the first ones to become a part of this launch, will not have to, okay? So you'll be okay with that. Somebody's asking, on which time frame does it work best? Okay, I told you that's the most common question I get, and that's the most, well, remember, it's up to you to decide. And there is no such thing as best time frame, because one trader's best time frame is another trader's worst time frame. But what we have found just through our observance and research and of studying of the oscillator is that there is a lot of noise that happens when you go to smaller time frames. Now, even though you can apply this to, say, like a 15-minute time frame, we would suggest most traders apply it to no lower than a 15-minute and actually use it on something like a half hour to an hour to a daily chart. In my opinion, I've seen better signals then. But you may look at it and say, no, Steve, 15-minute works great for me. That's okay, that's fine. But I personally like to use it with a 30-minute or with a daily bar chart, okay? I gave you examples today looking at daily and weekly. But we know that a lot of traders, you know, aren't intraday traders, and so that's why we formatted it for that. But there's a lot of noise that's associated, because this is so fine-tuned to determining and identifying these turning points and these setups. The smaller time frames you go, you may get a lot more whipsaw. So I personally would not suggest anything below 15 minutes. And I would recommend, or just say suggest, looking at daily, anywhere from a half an hour to daily charts, okay? Good questions. Any other ones? Someone is asking about staying in contact. Yes, you can always reach me whenever you like with my personal email address. As I say, with all of our presentations, with all of our courses, you will all get my personal email address. I know there's going to be some learning curve. People will not, be used to this because I say, hey, this oscillator isn't the way the other ones I've used. Yeah, that's because we're giving you more to work with, and we're giving you 4 different techniques. I don't know any other oscillators that will show you different ways in which to apply it, but you're going to get that with the Primo oscillator. And because of that, as I said, there may be a learning curve. So you will get my personal email address where you can contact me. All emails, as I say every time, go straight to me. They don't go to an intern. They don't go to an assistant. So I will see all of your emails and I respond to them accordingly. Okay. So no one else will see them. Okay. Can we ask you questions in the live class? Sure. I mean, I want you to ask me questions in the live class. The live class they're asking about, the other classes we've had in the past have, been long courses where we've talked over a number of things, and sometimes they're 2 or 3 days long. I don't see this being longer than maybe a 2 or 3 hour course, maybe even less. Okay. But we're just going to be going over that. All right. Will this work on any other platforms other than Primo charts platforms? At the moment, no. That's why we said we're throwing in, because of your participation, we're going to give you a full year of the Primo charting platform, with the PTS Primo charting platform, because right now it's only available for that. There may be other updates and other improvements in the future, but as of right now, we're only having it available on the PTS Primo charting platform. Yes, as some people said, they got in a little late, they missed it. Will this be sent out? Yes, this is going to be sent out to all of you. Please watch it as often as you like, because I go into detail. I showed you just that one technique and how you really could have helped your trading this past week alone using this type of setup. But remember, we're only going to keep the class and these opportunities, these bonuses, for a limited amount of traders. So be the first to get involved with this and take advantage of this great price. And remember that $49.95 is not set in stone in terms of you have to have a one lump sum. You can contact Pro Trader Strategies. Remember, there's absolutely no obligation, and set up a payment plan with them. They'd be more than happy to work with you. They're very flexible, and they can set up a payment plan so that you don't have to come up with one lump sum. I know we have a lot of prospective students that say, Steve, I'd love to join. I just can't come up with $49.95 right now. That's the beauty of Pro Trader Strategies. They're flexible. They'd be happy to work on a payment plan with you. Okay. Okay. So there you have it. This is the launch of our brand new feature. I'm very proud of this. We worked you don't know how hard we worked on this new feature, because, as I said, it was really a labor of love because of working with our programmers who are out of the country, and just because there was a major communication problems. And so that's why it took so long. I want to thank you all for your patience in waiting, but I think it was worth the wait, as you just saw. And I'm going to be giving more presentations in the future, but I don't think we're going to have this great of an offer, because we will have people signing up, and we want to take advantage of the first ones and give them the best offer. So if you're interested in it all, contact Pro Trader Strategies with any questions, and they'd be happy to work with you in putting together a payment plan. Okay. As we close up right now, thank you so much for attending. I really hope you are excited as much as we are about our new Primo oscillator. And most of all, I look forward to all of you becoming students of mine in the Primo Oscillator course. Thank you so much. Watch the video, contact Pro Trader Strategies, and looking forward to seeing you all in class. I'll see you in class. Bye-bye. Thank you.